Good morning, everyone. Um, this is for y'all. I made a pretty good killing in the market this week from just conviction and following price, and that's exactly what I'm going to go over today. How to just follow the price. This is going to be from charts. You can use options, stocks, whatever you want to do. Credit spreads, calendar spreads, anything works, right? Strategies work. You just have to be disciplined enough to stick with it, and eventually it'll work, right? You have to know how to do it right, and you might have to go through trials and tribulations, but if you get it right, you stick to it. Same thing. Discipline yourself to just do that. And forget the noise. Forget what everyone else is doing. Just stick to you and what works for you, and you'll win. All right. I'm gonna just pull up the charts and we'll go over exactly what I mean when I find breakout trades. So first of all, in trading, right, it's a different mindset from being an investor, right? As an investor, you're looking to buy low, sell high. You're looking to get things for a value or at a discount, and you can hold it for a certain number of years or for the long term because you believe will go up in value, right? As a trader, you don't care what the price is, right? I mean, yes, you do care, but if it's going up, it's going down. It doesn't matter. You can make money, right? You can make money if it goes up. You can make money if it goes down. You can make money if it goes sideways, right? There's so many different strategies. But as a trader, you know that your focus is on growing your account, on getting locked, securing profit, like literally extracting money out the market on a daily, weekly, monthly basis, right? You're not really holding anything for the long term because you don't need it, right? All you're focused on is compounding profits, right? So what you want to do is follow the price. Okay, you probably hear trend is your friend, right? But what does that mean? It means if the price is going in this direction, you position yourself to ride that wave, right? You go with the tide, with the waves, with the ripples. Right now, I'll explain to you what that means in just a second. But if you know that on a certain day that the markets is green and the price is going up, right? The buyers are bidding up price is going up. Nasdaq's making new all-time highs. S&P is making new all-time highs, right? Just follow the price. It pays to follow the price. Things are going up. You're gonna get paid when things continue to go up, right? And it's like law of inertia, physics. What goes in motion tends to stay in motion unless something stops it or causes it to reverse, right? So how high can things go? You don't know, right? How low can things go? You don't know, right? You can say this is support, this is resistance. But what happens if it gets passed through it? It can keep going, right? It can keep going higher and higher and higher until it eventually decides to stop. And who decides, right? It's the market. It's a bunch of participants. It's literally people's opinions on how they feel on what the price should be now or what it should be in the future, right? If they like the price and things are going to go higher, they're going to buy. If they don't like the price and things are going to go lower, they're going to sell. So you just follow the price and follow the psychology behind it, right? If people are bidding up and people are buying as a trader, you want to buy, you don't want to sell, right? As an investor, when things are at all-time highs, that could be a good time to take profit, wait for things to come back down, right? But what happens during 2020 COVID crash, during the drop from 900 to 540 on Tesla, right? If you're holding long positions, you got smoked. But if you follow the price and price is going down and you can play the downside as a trader, then you make money on the downside too. It's all about psychology, right? Price goes up, you're in position to go long. Price goes down, you're in position to go short, right? Price falls faster than it goes up. I don't. If you guys watch the drops on any of those days, it falls faster. Stocks take the stairs up, take the elevator down, right? So also appreciate when stocks go down, you can still make money, right? And if you're a buy low, sell high investor, you can wait till it drops to a certain price and you get in for your long positions as a long-term investor, right? But as a trader, you're focused on the trend, right? You're focused on things that are in motion, focus on price action, you focus on reacting to what things are doing. Okay. You can look at this chart and say Tesla could go to this, could go to that. But if you don't execute and you don't do anything about it, you don't make money. Right. So once Tesla does this, right, it gets to this price and it can go higher, I'm gonna position myself to keep going, to take the long position. Right. So first, start at the month chart. Okay, you need to know the tide. You need to know the big picture. Where's the big direction going? And we know since 2020, the past year and a half, Tesla is going up, right? People are super bullish on Tesla. If you look at the chart, you don't even need to pay attention to fundamentals as a trader. Look at the chart; it's going up, right? Even if Tesla is not making that much revenue, let's say because costs are high and they made more on Bitcoin than they did on cars. But look at the direction. What happened when Tesla dipped to the 500s, 570s? Those dips got bought up. Why? Because people are bullish. People are going to buy, right? People are going to buy. You need to know what the long-term big direction is, right? As a tide. It pays more to go with the tide than against it, right? Second, go down to the weekly. Weekly, now you have a little bit more data to work with, right? You zoom in a little bit more. You pay attention now to the waves, right? Pay attention to the waves on the weekly and the daily, right? What direction is it going? I changed the colors of my candles because, sorry, I'm gonna turn up the light real quick. I changed the colors because I just like the colors. It gives me a little less anxiety when things are like red and a little less euphoric when things are green. It kind of keeps you cool, right? Green make money, red lose money. But like when I change the colors, it kind of, a little less anxious. Okay, so high key, okay? No one talks about this, but the monthly highs and lows are real support resistance, okay? If you marked off this monthly low from December 1st, where did people look to buy? Around that area, right? It might not get to that exact price, okay, but it's gonna get to that area and people are gonna buy, right? Think about it. It's been months since a certain asset has gotten to that level, right? If it's been months and people have been waiting to buy, what are they gonna do once they get back down to that price on a super bullish stock like Tesla, right? They're gonna buy, right? And even this month's low, June's low was 570, close to the 540, 550 mark, but people are still buying because people have FOMO. They missed out. They missed out on all of this, right? So if they missed out on all of this, they're gonna want to get back. They want to get in, right? People are waiting to get in. Institutions want to get in, right? So they have these levels set up on a higher time frame where the highs and lows are. And that gives you really important highs and lows, support and resistance, right? So you mark off the high. So if you look at May's high, it's about around 706, right? 706, 720, which was March's high, and April's high, which was 776. So those are levels you want to mark up, right? Now, when you go to the weekly, okay, you want to pay attention to what was the most recent high on the weekly, right? The most recent 4-week high, which was kind of like the month's high, right? June 1st. Okay, so let's say this never happened, right? This week never happened. 1, 2, 3, 4. You go to June 1st high, which is 634, right? 635.59. You round up to the next whole number. That gives you a good breakout number, right? You could trade whole numbers, or you could take a certain number, add 15 cents to it, and that gives you a good solid entry to get in on a breakout. And why do you want to get in on a breakout? Why do you want to buy high? It doesn't work all the time, okay? So if it doesn't work all the time, you need to know your risk levels and what your risk management is. You don't want to put all your portfolio into a certain play because what if it doesn't work? Let me not say play, let me say trade, okay? An opportunity. You don't ever want to put all of your eggs in one opportunity unless you have high conviction where like you can't lose, right? So why do you want to do that? Because of following the price. If the price is going up, right? And it hasn't broke above 636 in weeks, right? I'm talking about weeks, 4 weeks. What happens when it finally does? The probability of it continuing higher because the price is moving in that direction is a lot higher, right? If you try to short it at 636 yesterday, you probably got fucked, right? Sorry, excuse my language, but it doesn't make sense. If price is going up, you want to be long. If price is going down, you want to be short, right? I personally tried, in trading at least. Long-term investing is a different story. We're not going to talk about long-term. That's trading, right? if you buy when the price is down, it can go lower and your position can get smoked, right? If you buy when the price is up and it can go higher, then you're in a position to win, right? Sometimes when you buy low and it goes red and it turns back green, yes, that's like a bounce. That's a good trade, right? But more times than not, personally for me, when I buy when the candle is going up on a high time frame, it tends to have a high probability to work in that direction, right? Just follow the direction. So if the month is green, or let's say the month is up, I'll just say instead of green, I'll just say up and down. If the month is up, the week is up on a day, and this is a secret that no one talks about, right? The 1 hour, up on the 1 hour on the intraday time frame, then it pays to go long, right? It's going up on 4 different time frames. People are making money on 4 different time frames, right? That's confluence. That's as the strat says, full time frame continuity, right? They're all going in the same direction. So if they're all going in the same direction, why would you want to go in the opposite direction? Just ride the wave, right? Go with the tide, not against it. So for example, this morning, right, I said Tesla above 678 can blow. Why? Because this was the pre-market high. Okay. Remember, if things go high, they can go higher, right? Especially on a bullish stock. It's trending up, right? So if it's trending up, I'm looking for breakouts. Or if you missed the breakout, you can get back on the retest, which was at 10 in the morning right here, right? It came back down to 678. What happened now? It went to 695 today, right? Very simple. Price breaks out of the high is bullish momentum. Markets are hot. Pay attention to NASDAQ and ES futures. We'll get to that in a second. Your 1 hour time frame will give you the supply level that needs to be taken out, right? Same thing for here. Yesterday, 635 was pretty much 636, right? Everybody was watching that level. It's the pre-market high, and it's the 4-week high right around that area. If it blows, it's gonna blow. It's gonna rip, right? A chance of continuing higher is very high because everyone's been waiting for this, right? It has bullish momentum. So pay attention to the monthly, weekly, daily time frames to see what direction is going. Go to the 1 hour time frame to see what level needs to break on the pre-market. What's the high? If it breaks out and goes higher, it can go higher. How higher it can go, no one knows, right? But you can use the 1 hour time frame. You can use the weekly time frame, right, to mark off some levels. Okay. So I said 650 is next. Why is 650 next? Right. 650 is next because right here, this was May's low, right? 648. Then this is 665. I said these two levels are here because this is the week's high. Where can it go to? It can go here. Next week's high is 705. We're almost there. It's 695 was the high today. We're almost there. All right, 705 is within reach. It's possible, right? Does it have to go there? No, right? But it's possible. If it's going in that direction, these are certain levels on the higher time frames, guys. The weekly and the monthly will give you the key support resistance levels that are very important, right? If you're intraday trading, you can go to the 1 hour. Okay, the 1 hour, if you want to play breakouts to the upside or downside, you can chart the 1 hour time frame to see where is the key level either in the pre-market or a previous day high. So a previous day high yesterday was like 656. If it blows through 656, it can keep going, right? There's supply here. There's people selling here. So if they get squeezed out, it can keep going. What happened after hours went to 663. This morning gapped up 670, right? It works. Does it work all the time? No. But if the stock is trending, the probability of it working is in your favor, right? You follow the price. Price is bullish, you want to go long. When do you want to go long? That's up to you. But if you wait for the breakouts for it to break higher, the chance of it continuing higher is probable, right? You just have to time it really well, and you have to know at that certain price that you want to get in, you have to fire. So let's say 678, you missed the fire. Okay, it goes back to goes to 682. Are you gonna buy at 682? No, you just missed 678. Now it's up 4 points. People who got in at 678 are taking profits, right? I had a level mark at 682 that I'm gonna just trim off a little bit more position. right? So either retest the high and you can get back in. Why? Because if people FOMO'd out here and the shorts get squeezed out here, it comes back, they're gonna buy back again. Resistance turns to support. Very simple, right? So many different ways to get in the market. You play the breakout or when resistance turns to support, the retest as a trend follower, right? It can keep going. You mark off using the weekly or you can use a 1 hour time frame. You would have to go all the way back to like, I don't know, around May. Where was May's high? 690 right here. Look back in time, and they'll give you certain numbers that the price can get back to. And people were selling pretty strong here because it got FOMO back. You got back holders from 690 that still held through the drop down to like the 560s. Now it's finally back. What are they going to do? They're going to get out of their position because they've been in the red for a month and a half, right? So always use crowd psychology, use direction. If you're doing options, you need to have a specific option strategy. It can go up, it can go to zero. If you're playing weeklies, you have to buy weeklies where it can go to zero and you don't care, right? As Sam says, like weekly options can go to zero. There's barely any time left, and if they're out of the money, it can expire worthless, right? If something moves big, like Tesla does, you can buy the out the monies and still win. For example, the 700s were at like 80 cents yesterday, and it went to like 8 today. That's a 10xer, right? It can happen. But are you willing to risk that? That is the question. What is your risk tolerance? What is your risk level like? Are you gonna, risk 5% of your account, 10% of your account, 20% of your account? Like how much you want to risk? You know what I mean? Personally, the pros don't really risk more than like 1 to 2% of the account. So if you have a large enough account size where 1 to 2% of the account is a decent amount of money, right? Then you can literally put 1% of your account into a position and it can go to zero and you still have 99% of your account. That's okay, right? But if it rips, like if that one goes to 5, like it did today, goes to 8, then you just had a 5, 8 exit. Those pay, right? Those pay. Risk to reward matters. Risk to reward matters the most, right? You only want to go for things where you can make 3 for every one you put in. Why? Because it'll pay off. If you lose 2 in a row and you win a third one, you win, right? If you win 3 in a row and you lose 1, that's fine. You just had three Xers and 1 0. Like Sam says, like it's okay, right? So your all risk to reward is everything because you will lose. Like I lose, everyone loses. You can lose. You can lose it all, right? But if you risk less, if you don't have a big position size, you're not sweating. No sweaty pits, right? You're gonna sleep very well at night. Only risk what you're comfortable risking. If you're at your computer screen just sweating, just very anxious, like scared, that means you're trading too big, right? You need to accept that things, if you're playing options, especially things can go to zero. Naked options, it can go to zero. If you're playing spreads and other different types of option strategies, they work too, but you have to know what works for you, right? So that's just for Tesla, right? Pretty much, like I said, monthly, weekly, daily, 1 hour, all in the same direction, full time frame continuity. Play the direction. Use monthly for your key resistance support levels. Use weekly for also very key levels, right? Charting support resistance, you want to do it on a higher level. And if you're intraday trading, go to the 1 hour chart on stocks and look at where the breakout supply level is on either on that previous high of day, previous low of day, or high and low of the pre-market. Let's go to Roku. Okay, I've been screaming Roku for a minute. Why? Personally, I bought back when it was 276. Okay, it was a lot of fear. I don't know why it sold off like that. Sold off pretty hard, and yeah, delete this. 276, way back down here. Said, okay, it's 276. I'm gonna buy. And what's happening is at 430 now, right? That is buy low, sell high investment strategy. Buy things at a discount, it rips, right? It's a bullish stock. Roku has been bullish for, let's go to Roku's monthly, right? Start with Roku's monthly. What's the direction? Especially look at this month up, right? Roku has been bullish for a long time. What happens when things are bullish? People have FOMO. People missed out on the cheaper prices, and if it ever gets cheap again, they will buy, right? Unless something fundamentally is wrong with the company, people are going to sell, right? And now I go back to trading direction on the Monthly chart is up. The trend is up. Bullish, very clear, right? Weekly, same thing. Weekly is just a more zoomed in version of the monthly, right? Remember, monthly mark off the highs and lows. This is where I bought the high, 357. If it breaks past 357 May's high, it can rip. Why can it rip? Because it's been higher before, right? 98, 430. Simple, right? What is it possible to hit all these levels? Yes. Will it? We don't know. We don't know when. You don't know how long it will take, but it's possible, right? Or the weekly, now you have even more intricate levels, right? You have even more targets in between those monthly levels because now you're zooming in week by week, right? Week by week gives you some more levels. So you can mark off some of these levels and they can give you targets to trim off profit or to add, right? If things are going your way, you can trim, secure profit, and you can also add, right? There's another high right there. So boom, let's say none of this happened. Well, Roku on the daily, okay? It broke 357. Remember, that was the month high, right? Went to 370 that day. Okay, it came back down, right? You can play the puts too. Things are down. If you buy calls and things are down, you're getting smoked. Why not play the down direction, right? If you're intraday trading, what only matters is what happens during that day, right? What is the direction of the day? Now, you're doing full-time continuity, month, week, day, on 1 hour, all in the same direction. Very high probability that one day will be in that direction, right? Now, again, FOMO buyers, 328, right? People missed the boat here, 325. They're going to most likely buy again at 328. And then boom, once this took over, straight green streak. Roku in the past is a bullish stock. Look what happened to Roku in the past. You know this can happen, right? By looking at the past, this can happen, right? Once it get past 356 again, boom, right back up to this day's high. And then boom, 378. If it breaks past 378 and 398, things can really take off, right? If you go to the 1 hour chart, look at breakout, breakout, breakout. You mark this high right here. Mark that high. Broke the high, long. This is the high. Broke the high, long. Came back to retest that. Yes, you can. That's the secondary entry, right? Broke the high again, long. Broke the high again, long. And this one, the high was like 420, 430, I think. And then this is when people start taking profits. And that's expected. Things go from 330 to 430, 100 points. You know people are going to take profit. And then look back. There's people back holding Roku from 430 back in February. They get back to even. They're going to sell out and get their money back. They've been losing for 4 months now, right? So it's going to happen, right? Things can blow through levels. They can meet the levels and you meet a lot of supply there. It happens, right? You just need to manage your positions. Know when is a good time to take profit and know when to hold your winners, right? If things are going up, what's the chance that they can keep going up? They can keep going up, right? If you said Roku at 370 can't hit 400, well, it hit 430 today, right? It can happen, right? You never want to say it can't happen, right? It can happen. Anything can happen in the markets, right? If you're prepared for it, you'll make money. If you're on the right side of it, you'll make money, right? If you position yourself the right way, you'll make money. If you let your winners run, you'll get rich, right? Cut your losers and let the winners run. It's a very hard thing to do because there's a lot of fear behind that. What if it comes back down? What if my profits disappear, right? What if, it doesn't work out? Anything can happen. But if you know your risk tolerance and you have a way of locking in profit, then once you locked in enough profit for yourself, let your winners run. Let it run. It can expire, right? If you let it expire, it might go to the highest price possible. Or you can just pick a number. Pick a number and say, this is where I'm going to take profit, right? Along the way, if you took profit at any of these levels, it's okay. But if you held the winner since like 356, right? I went up 80 bucks or 70, 80 bucks since that time, right? So remember, monthly chart, support resistance, long-term picture, right? Go with what is the tide. Weekly and daily, what is the wave, right? What direction is the wave going? 1 hour, where is the ripples going? What direction are the ripples going? Okay, if all time frames say up, right? This month is up, this week is up, this day is up, and to right now it is up. You play that direction. Simple, right? Trading should be simple, right? It can be very hard to do, right? And it took me a very long time to figure it out. But through trials and tribulations, you find what works for you. Keep it simple, right? Keep your system simple enough where anybody can trade it, right? Anybody can trade it. Price goes up, you're long. Price goes down, you're short, right? If you're using green and red, green means up in the candle, red means down in the candle. Follow the color, follow the direction. The color gives you the direction, and the month, week, day, 1 hour all give you a certain direction. If they all line up to be in the same direction, that's a gem, right? The probability of it continuing in that direction is very high, is in your favor, right? And why I only have 10 stocks in my watch list. Okay, these are all stocks I invest in. So you watch the same stocks for a long time. You study them, you know how they move, right? As a trader, you can trade any stock that's out there. Okay, I would recommend just going with bullish stocks. Okay, going with good companies, bullish stocks that can go, that can run, right? Why? Because they'll pay you. They will pay you when they run. Will they run all the time? No, but like if they do run, you wait for it. You're there for it. You execute. Okay, just wait. I can tell you I lost a lot of money just by being impatient. I think you could trade every day. You don't have to trade every day. You can wait. You can wait for the best opportunities out there and take those trades only, right? If there's no good setup, you don't trade. If your edge says there's no opportunity for you to take, you don't trade. It's that simple, right? You overtrade, you're gonna lose all your profits. And I'll tell you how many times I overtrade and I'm up 10K and I'm down 11K, right? It's not worth it. Know what your goals are and stop trading once you reach your goal. Protect your profits. You can risk some profits and make more, that's fine. But overall, you need to be up. You need to be up for the week. You need to be up for the month. That is the goal. Is every month going to be green? Every week going to be green? No, right? But you need to know what the risk tolerance is. How much are you willing to lose before you call it you're done for the week? You're done for the month, right? If you get to that level, you need to stop. You can't ruin your account. You can't ruin your account and blow it up. If you do, you have no money to trade. Let's say you blew it up last week. This week, Roku went up $100, right? That's not fair to you because opportunities come and go every day. They come. You have to be ready for it. You need to have capital to trade it. You don't have capital to trade it, and you can't make money. So you need money to make money, right? Protect it at all costs. Don't just risk all your money into certain trades that can't make anything, right? Wait for the ones that will pay you and they will run. Okay, so just to wrap it up, I didn't have no slides or anything because I want y'all to just listen to what I'm saying because this is all from my experience and what works for me, what doesn't work for me, right? Follow the direction. Trading is about being on the right side of the move, right? Holding a position is very hard as a trader, right? Letting your winners run is very hard. But if you've taken enough profits and you let your winners run, they will run and they will pay you. They'll make you rich, right? Be patient for the big days. Be patient for days where stocks can move and move big, right? They can and will. Okay, you just have to wait for them. Wait for the right setup. If the setup is not right, don't take it. Just don't take any random setup, right? Do your due diligence. Make sure you have high conviction in certain trades, and you will win. Know your risk tolerance. Okay, like if you have a certain account size, then you can't risk all your account in one trade. You can't risk half of your account in one trade, right? Know your risk tolerance. Know how much you're willing to risk. You can lose it all, right? If you make the wrong decisions, you can lose it all. If you take too big of a position, it can go to zero. Options can go to zero, right? Anything can happen. So be aware that if it goes to 0 and you're okay with it, then that's a good position size for you. If it goes to 0 and your account is low, that's too big, right? Take smaller positions. Get comfortable with it, make profits, then you can start risking profits to go bigger, right? If you're using charts, keep it simple, okay? Don't add too many indicators that you don't understand how to use. Use the indicators that you understand how to use. Know where you're going to get in, right? Know exactly where you want to get in. You don't need 10 indicators to make money, right? Some people make money off straight news. Some people make money just using 1 or 2 indicators. People don't use indicators, they just follow price, right? You need a strategy that works. If it works and it works in the long run, right? If it works on any stock, on any asset class, then it works, right? You need something that's back tested, something that works. You need to take this seriously, right? You want to make money from this, you got to take it seriously, okay? Market pays you for being prepared, for doing your work, for doing your due diligence, and executing your ideas. It doesn't pay you for being lazy, right? Don't just follow other people's trades. Know what your trade is, right? If somebody says to do this, don't just do it because they're doing it, because you don't know their intentions. You don't know when they're going to get out and how many contracts they bought and what position size it is and relative to their account. You don't know like their risk strategy, like profit taking. Like, no, you have to make it your trade. Be responsible for your positions and be responsible for the outcomes that happen, right? If you had a chance to take profits and you didn't and it went red, that's your fault, right? No one could do that for you. You have to be able to take profits on your own. You have to cut losses on your own, right? Everything is up to you. You have to do it. And be patient, okay? This is a marathon. It's not a race to go to get to 100K by the end of this year. If it happens, great, right? Just take the opportunities that come to you, right? But don't be impatient and think this is some get rich quick thing. No, it's get rich slow, right? You can make money fast using options, but can you keep it, right? Can you keep it? Can you keep all the money you make? It's hard, very hard. But there's no one to stop. Know that saying, okay, this is my goal. I'm happy, right? I'm satisfied. I don't need to keep trading. I'm good, right? And honestly, you can do it, okay? Find your edge. If the one I presented to you, you like it, you can use it, right? Month, week, day, 1 hour, time frame continuity, breakouts, supply levels on the 1 hour time frame for intraday, month and week, support resistance levels for targets, right? Know your risk to reward ratio, 1 to 3, 1 to 5, 1 to 11, 1 to 20. And only take trades that you know can win. Don't take trades that you don't have the conviction that it can't win, right? Believe in yourself. Believe in your edge, all right? You guys will do great. Love y'all. I'll keep making videos, and we'll be back another time. Have a good one.